All right, well, happy Friday morning. I don't know if you woke up to this, but I did. Oil prices jumped up quite a bit. In fact, they are up over 10% in the last week. Look at that, just from low 60s to mid 70s in a sense, right? Natural gas holds strong. Now, what is this from? As you can see from this, the oil forecast rushes to revise outlooks as Israel-Iran conflict escalates. Now, why is that? Because I don't know why we hate Iran and Iran hates Israel and Israel hates Iran. I have no idea why. It's a Middle East conflict, right? I'm sure we can go through the history and still be confused as a Westerner. But the issue is this: Iran produces about 10% of the global oil supply. And so if there's a conflict there, that is going to really shake up the oil supply. And oil is very efficient, right? It is um, it is produced and streamlined in a way that if there's any, to make it as cheap as possible. What this means is that if there's any interruption in it, right, the price goes up. All right, because again, we've got all of our ducks in a row. If one or two of them step out of line, the dominoes don't fall right, you know. So Iran produces about 10% or more of the oil of the world's oil. That's a lot of oil, and it's especially with the Strait of it all being shipped through the Strait of Hormuz, or most of it. And so it could a big conflict like this could, at the very least, disrupt it. Um, at the worst, it could take it out. As in other words, if someone bombs Iran's oil oil production in one way or the other, right? That means they're going to take off 10% of the world's oil for a while because these things take time to get going again, right? So that means prices would fly up pretty well. But my point is this, is that it's good for us. This is geopolitical, and again, oil is heavily affected by geopolitical stuff, both up and down, right? For the last 3 years or so, we've seen it kind of push to oil and gas to the down, excuse me, to the downside on at least in the U.S. market, but now it's finally kind of it's pushing up. Now I hope this doesn't happen. I really hope it doesn't happen again. The world doesn't need another war. There's already two of them going on right now, and especially because the U.S. backs Israel. So if Israel decides to poke a bear, that means the U.S. has to bail them out. All right, here's a cool chart for oil. Again, as you see, it's been hovering in the mid, or sorry, low 60s. Popped up, actually went up 10% last week or beginning of this week, and it popped up again. And here's the interesting thing that I saw. It went up to 70, almost 78, 77 and a half earlier today. Then trading brought it down. So my guess is, depending on how much FUD there is in the market, it will probably stay and go up again. But this is definitely a bull market right now. Now it is, the good news is there are no gaps, right? In trading, they say you always fill the gaps. So in other words, if it went here and then it just jumped up here the next morning, there was no lines here. In other words, you didn't take the stairs up. You skipped. You did a Superman hop, or if you will. It says it gives it back, and we're looking at the chart with that. But that's the good news. Oil could fall again. It's we'll just see how it plays out. But um, this is good news for us in the oil space. You know, we'll cash in. Drillers will drill on this. And again, just because the price of oil goes down or up does not mean it's a supply issue. Now, supply does affect it, but things pushing down right here. If you're on the ground floor, you're seeing supply start to dwindle, dwindle, dwindle. It just might take some time before it pops out, right? So, um, yeah, we're just going to see how it goes. But let's look at natural gas. Natural gas holds steady. It is in a bull market. Again, it's above this white line. So it is continues to just kind of go up, go up, go up, go up. It'll hover here. We'll see. It'll probably hit this white line again and kind of like it did here and bounce up again. So that's the 200-day moving average, or 180 as we put it. SPX. Excuse me. Let's go over that. All right. This is the best top we've had next to 6,100, right? In the history of the S&P, it's never been that high. Okay. We the tariff issues popped it down, came back up. We had a very big kind of V-shaped recovery, as they say. And here is this huge gap. We all thought it was going to hit its head on this and bounce down. It did not, but here's this gap. So What may happen is it may run out of steam. It may just do a stair step again and pop up, and we have a blow off top. It may come down and give this back, right? We will see. It's, its probability is 70, 80, excuse me, it's 80, 20, 70, 30. But let's look at gold. Gold stays strong because people are worried about currencies and everything. Um, it's hovering around the 3,400 area, give or take. Again, I'm not. I bought gold at the last top. I had to wait for a while for it to come back. I am not going to buy gold here. You can if you want. Again, none of this is financial advice, but it feels like this is a top. This is not a time to buy gold. There's a lot of frothiness up here, even with gold. Even though through the test of time, gold will still stay good. But let's look at silver. Silver had a breakout, popped up higher than I think anyone's ever seen in my generation. Let me look at the chart. Yeah, the last time it was this high was back in 2011. Holy heck, and it went up to silver topped at like $50. That's crazy. Um, but it went down and now it's kind of back up to 36, which is interesting. Now, someone was telling me this is kind of forms a cup and handle right here. Cup, same thing we saw in Bitcoin. You've got your handle here, and which is you measure from the top of the cup to the bottom of the cup, which is, I'm gonna say $10, right? So it should go up to 40-ish, give or take, maybe higher. That's what the charts would say, right? So we'll see what happens with silver, but that's a good breakout for any silver holders or silver buyers. Well, not good for silver buyers. Coin hovers around 105, right? So it had that huge breakout, and it's kind of starting to go up again. I guess there's more FUD with the currency that's happening because that's typically what fuels the Bitcoin. But if you notice, it's just like the SPX. It's having some waviness into. It's not falling exactly, but it is having some waviness in, and it is in a bull market right now. But with crypto, that can change once you blink. Speaking of currency, let's take a look at the US dollar. And again, it has fallen and it keeps falling down. This is one reason why crude uh is going higher. It's not tied to the dollar anymore. Like with that was never, the petrodollar was never a formal thing. It was just like a handshake. Hey, we'll protect you. You'll buy it in dollars type thing. Um, but the dollar is down. Now, the last time this happened, let's take a look. Let's take a very big bird's eye view of the US dollar. So last time it flew up was right before the dot-com crisis, popped down, came down, and then here it kept going down. That's very interesting. It kept going down until '08, and that's when it really ripped up. So we'll see what happens here. Again, the dollar's been kind of everywhere, but it seems like it's kind of going up, trending up. So in the long term, this is a monthly indicator, by the way. So we've got all the way back to the 2000s. Um, it seems like it might be following this pattern where it kind of chops and then pops up, possibly. I mean, it could go down. It's still in the bull market as far as decades are concerned, right? As far as it goes on the daily, it just popped below it, but it is a bit down. My biggest concern with the monthly chart was to see what would happen in the last recession, right? But it seems like it was just kind of going, just for clues, going down, 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 and then the value going down. Then once the recession hit, people needed dollars and it flew up, right? But here's the thing, yeah, in 20, I don't know what happened in 2014 where it flew up, and then again in 20, around 2020, 2021, it flew up again, or it went down and it flew up again. It's just all over the place. I don't know what to predict in this, but if the value of the dollar goes down, what that means is all the other assets go up. Everything you can buy dollars with goes up, and vice versa. If we have a recession, what happens is the value of the dollar goes up, and everything else, excuse me, goes down. Speaking of things, let's talk about housing. Here we go. Redfin calls the U.S. housing market has nearly 500 more sellers than buyers. The most on record. This will likely cause home prices to fall. So Redfin is now calling it a buyer's market, or soon to be a buyer's market. Here's what I heard at. This is a thing with Resi Club Analytics. Here is their chart that you had to be a premium member. So I'm just going to kind of go off what I found on YouTube. But basically, here's his chart of it. And the big thing to know is the red is the buyers, the blue is the sellers, right? So from 2020 to 2022-ish, middle 2022, you had a record number of buyers in comparison to sellers, right? So sellers were low, buyers were high, right? That's a buyer's market, excuse me, a seller's market, right? Kind of went sideways as we've seen it now. Inventory is starting to go up quite a bit, right? So there's more sellers than buyers, by a good margin. Again, this is just starting. Let me say it again. This is just starting. This could go all the way up here, and the buyers could fall. What does that mean? Supply and demand, right? Housing. That means housing prices would go down. Okay. Doesn't matter where you cut it. Now, a lot of people always tell me, hey James, housing always goes up. And granted, I'll give you that. In over a period of years, of decades, yes. But the issue that I'm concerned with is the next 2 to 4 years, right? I'd rather sell when there's a ton of buyers, right? And then buy when there's a ton of sellers, right? In other words, I don't want to buy when the market's high, when there's everyone jumping in saying, "Hey, let's buy. This is the best thing to slice bread. This is how you get rich. This is how you do it." That's when the boat has sailed. FYI, if you're in that, the boat has sailed. You're not getting in now. You want to get into something when it's not popular, when you're contrarian and everything. Kind of like I've been telling people to get into energy for the last like 2 years, right? And as we saw that little pop, that little hockey stick up. And again, natural gas has just recovered, so it's been quite good for myself and some partners. But my point is, you don't want to buy here. This is when I sold a lot of my properties, and I cashed out really well. Okay, and now I'm gonna wait till this gets up here, and the buyers fall down, and I'm gonna go get some discount goods, if you get my drift. So let's take a look at this list. 75 major housing markets where inventory has bounced back. Lance Lambert says, um, uh, wow, the highest is the Killeen Temple area, which is the army base. This is the largest army base in the U.S., the stateside of the U.S., I should say. I don't know about internationally, but look at that, 122%. Colorado Springs at 91. Let's look. Waco, Texas, 99. Huntsville, Austin, Round Rock, San Marcos area. Yeah, if you're in Austin real estate and you said those keep going up, yeah, you're hurting right now. I've had people in my networking group saying like that I told to get into energy, and they were like, no, our Airbnb's doing great. And now I talked to them like 3 months ago, and they're like, yeah, we can't get anybody in. We're losing money on it, and all these things, right? So it's hard to, like, I have compassion, but it's hard when you tell somebody, hey, this is what's going to happen, and they just blow you off, and now they're hurting. It's hard. But let's look at the big ones. So Austin is way up there at 71% more. Again, that's right now. The trend is not your friend if you're trying to sell. Okay, you should have sold at least a year ago, probably 2 or 3 years ago. Um, let's see here. Where is Dallas Fort Worth? Up 30%, so that's not too bad. Where is Houston? Oklahoma City is not okay. I don't even see Houston on the list. It could just be wrong. Yeah. So or San Antonio. Oh, there you go. San Antonio's at 44%. So yeah, Central Texas was really popular. Is starting to really pull back, and this is what we see as the indicators. The real popular places pulling back first. Okay, I'm not saying Temple's popular. It's something to do with the military probably, but yeah, Austin, Round Rock, San Marcos, though they're taking some hits. So yeah. Um, anyway, but here's a good chart for him type that he puts out. It's kind of like, yeah. So anyway, my point is that housing is probably going to go down. Prices will probably soften quite a bit. Now, how far will they go down? How long? Who knows? Who knows, right? But um, uh, the median sale price. This is what Redfin says for this is just for the Houston, Texas market. I just looked up one is down about 5% year over year. Everyone I've talked to said sellers are making concessions, right? So if you're buying right now, if you have to buy, or if you just decide to buy, make sure give what they call disrespectful offers, and just see if they take it, right? And just say, hey, this is good for now, type thing, and till this date, type thing, and a lot of times sellers are paying for title, to paying the realtor fees, paying all these other things. What they're doing, they're trying to keep the price high, but put all these other things to help the actual price go keep lower, right? But this is the beginning. Again, it is um, it is not going to get better with time unless something major changes. So again, right now we are here. What's going to close this gap, right? Something's got to change, something big. What created this? That was the government throwing a ton of money in it, and then real estate being popularized. Okay, same thing that happened in 2005, 2006, except the government didn't throw a lot of money in. Um, but I think this is just going to get worse, and this is going to slowly dwindle. That means prices are going to go down. And right now this is the fear greed index. I don't know how this is, but we're not extreme greed anymore. But we've been in greed mode for a while. It seems about a year ago we were in fear, is what they say. Um, Take it for what it's worth, But my point is, if we're in greed right now, this is when you want to kind of sell and get stuff off. When we're in fear or extreme fear, that's when you want to start buying, right? I think this needle in the next little bit is about to turn. Um, okay. So fear, anything above 50 is greed, anything below is fear. So it could have a short bounce and it could start to turn down and go down pretty quickly. Okay. In fact, you've seen of the year we've been more fearful. We've had deeper fears than we've had higher points of greed. Something to think about. Anyway, my point is oil's doing great. I'm sad of the reason why, even though we all know it would pop up. But if you're interested in this, let me know. I can get you in. But I hope you guys have a great weekend. I hope your Friday goes well. And this is James with the Giant Economy, and signing out.